Thank you, Angel and Heidi. How everyone? How are we doing? Well, I trust on this Thursday, the 23rd of September. Got a funny feeling you're wondering what the hell that is on my head. No? Okay. Then I won't explain. I'll just get on with the job and we'll go to pound US dollar to see what's happening there, see if we've got a breakout scenario that we can take advantage of today. I think it'd be okay if not for one thing. Four-letter word. It's not a word. It's actually not a word. FOMC. That chart is telling you that was the FOMC announcement, of course, or part thereof. That's don't know if that's 1 hour in. No, that would be the exact time, I believe. When I slept, and I shouldn't have slept because I was in a trade and I got smashed. Fortunately, I wasn't in a second trade. I was in the euro dollar long and that closed as a loss. I wasn't in a euro dollar short. It expired before the time, which would have been pretty much close on, bang on just before the announcement. Why? Because as you know, I closed my orders, my daily orders at 2000 on the chart time, which doesn't take me into bad trades normally. And there's a very, very good example of that. This would be in and now in trouble. So the reason I have this hat on, and thank you for asking, Paul P. I thought somebody would eventually. It's a dunce's hat, right? Because I'm in a dunce chair today because of that trade that I refused to cancel or refused to get out of before the FOMC statement. And this is a very, very good reason why we need to be very careful around those things. Now, normally I like to trade the FOMC breakouts, and yesterday would have been a wonderful opportunity to do that. So in one way, I'm probably glad that I slept in, but in the other way, I'm definitely not. You would have been triggered not long but short with the FOMC breakout, and again, you would be now in drawdown. Not out of it, but in drawdown. I think Ash and I will have a chat about the FOMC statement in the not too distant, but my take on it is very much what you're seeing right now. I've got no idea what that's all about. Knee-jerk reaction and unwarranted in my humble. I think this is far more the case, and I would dearly like to see something that allows me to get into this long on both euro dollar. I'll take the dunce's head off, shall I? Good idea. Yes, Paul P. I should wear it whenever I do a bad thing. That's two in 2 weeks I've done a bad thing. I need to concentrate a little bit harder, perhaps. Pounds, right. So our range is thus about 81 pips, so nearly 85-ish by the time we get to it. Look, I'm inclined to go with this, but it is a massive day for the pound. Actually, it's a pretty big day news-wise all over the place. We've got lots of PMIs coming out. We've got the pound monetary policy statement. We've got Swiss monetary policy statement coming up shortly. Yeah, could be a very interesting day. So what do we do? Look, I think we're going to place this trade, but I don't expect it to be triggered until the MPC statement comes out. So let's do it. We'll place an order 5 pips above there. Oh, by the way, the one from whenever that was it Tuesday? Monday. Hit target, thanks to FOMC, perhaps. So that one's closed at the 2.5% mark. Not that we're trading at 1%, but if we were, that would have been your 2.5% mark. And therefore, I kind of goes pretty much exactly with the theory, which is get out at 2.5%. Righto. So let's move on and place both a long and a short here. If you're here for the first time, this is a test system of trading, not a proven one. So please react accordingly. Entry level for the long is going to be 1.3694. So let's go in at 1.3694. We don't want to risk that much money. This is minimal stake, if anything, guys. 0.03 will be just sufficient. And I've forgotten the level now. 1.3, stop talking to me. 1.369 something. Let's go with 1.3693. That could be wrong. And the stop loss, that's 5 pips above here, by the way. And the stop loss is 3 pips below the low. There's the low there, which is 1.3608, becomes 1.3603. So 90 pips, that sounds about right. 1.3603, and that orders in with the stop. Yep, that works. All right, now we place the short. The short is a pending order. It's a sell stop. 1.3603 and 1.3693 is the stop loss. Okay, so OCO, if you get taken into the long, cancel the short. If you get taken into the short, cancel the long. And 2.5% is your, 2.5 times risk. Please don't trade this at 1%. Do not do that. 90 pips, bang on, right? So 180 plus 45 is 225 pips, which is there to there. Goodness gracious, Ignatius. It's into the next county. 225 is what we're looking for. So 139.18 makes sense. And going the other way, 225. Suppose I could do the maths, couldn't I, rather than do this? It's Thursday. I'm not in the mood for doing maths. 225 is 1.3376. That doesn't make sense, but it's close enough. 1.3376. There you go, about there somewhere. Righto, that is pound breakout trade. And like I said, if you are thinking of trading this with any substantial amount of money on the table, I would remind you that this is a test strategy or test system of trading, not a proven one. And also, it is a big day for the pound in terms of manufacturing PMIs coming out. And of course, the MPC bank statement. And you don't want to be messing with that like I did with the FOMC yesterday. Didn't wake up. I meant to. 4 o'clock in the morning. But it's that bloody red wine. I've had that last one. Hello, buddy. How you going?
I'm all right. I missed the fact you traded that. What were you doing with it?
Well, I was already in euro dollar, right?
Yeah.
So what I did was I was in on the daily chart trading this bar here.
Yeah.
And then, of course, the very next day, I got exactly the same thing going the opposite direction. At that point, I should have really said to myself, I've now got a prickly pear. I need to get out of this as soon as I possibly can.
Right.
Now, didn't give me that opportunity, or a nice opportunity. So I placed a hedge below that bar,
Mm-hmm.
and it expired before the FOMC statement.
Oh,
No, that's a good thing, I think,
okay.
because yeah, I would have hedged I would have got out of the long. Okay, I think. I just don't know how this candle formed because I wasn't awake. It may have been just completely terrible and got me in and out of both. I don't know.
Right.
Anyway, what I should have done is got out of the trade, or just completely made it so that I couldn't lose too much money before I went to bed. And I failed to do that. So I'm in the dunce's corner today.
Oh, mate. I mean, it was a tricky. I have to say, yesterday, I thought it was quite tricky waters. I'd been caught in a footsie trade for a few days, and sometimes I look at things and I think, when things clear up and they clear up the right way, and the market's all over the place, sometimes I think it's luck, just luck rather than judgment. I got kind of lucky with some of the price movements, and and ended up okay, out of the whole thing. But things did not go the way that I thought they were going to go. I'll show you my charts if you're kind of done there.
Sure. I am. Yes. I've got no orders. I have got an order in the market. I better share that.
Yeah, share the order.
I haven't looked at it since I placed the order this morning, so I don't know where it's up to. Okay, long way from entry. So if you want to follow it, there it is on the chart. Kiwi Swissy short, and they are the parameters around which I'm trading this. There's a real conflict here, and it is on both those trade lines. Getting in short here is a little bit dangerous, I've got to say. But if I look at this one, it's telling me it's false break and it's going short. After all of that, and then the broadening pattern that we've got here has broken and been retested to the downside. So I kind of think the play is on, but I do have an issue with the entry. And for that reason, I'm only trading it at 0.25%. So if you are following that, I would suggest you tread very, very carefully. There you go, mate. That's pretty much the only order I've got at the moment.
Yeah, well, no worries, mate. I wonder whether this kind of transition phase that we're about to go through is going to make things just a little bit more difficult to navigate.
Yes, I agree.
Yeah, I mean, we are looking for longs this morning in the FTSE, and that is not the position I thought we'd be in. I had longs caught up here. I managed to hedge it out. I got some longs up here, and then I hedged a short, and I got caught in a short, and I was lucky to get out of it in the end. As I say, it was more luck than judgment in the end, and I'll show you why. And things just did not transpire the way I thought they would. So we got a few things here. There's a really nice trend line here, and I think this is where we're looking for our long. And the reason I like that trend line is that if you look at the there's a little bit of confluence here, and I'm not even sure whether that trend line is absolutely the right place. But I like this here. So that brings us down into this area, and we got a little bit of a sweet spot. Now that is going to be 0.5% lower than where we are now. So if that was to happen in one hit, that might start looking a little bit scary. But indications are still for the upside. So I may well take that. The one reason I might pass on it is that the last few days have been a little bit of a more work than I like to kind of have for myself. And
yes, you have been raising a sweat up there. I've seen that.
It was it was a bit tricky, and I don't want to get caught in another long up here. And the reason I don't want to get caught in a long is that the FOMC statement. You said you were asleep, mate, but I listened to it, and basically we're heading into taper phase, and I think the thing that I managed to get out of my short on this bar here, and that was it. As soon as it kind of came down to this point, I thought, you know what, that's as good as it's going to get for me on my short, because the market did not react the way I thought it was going to react. I thought that Jerome Powell sort of saying that tapering was going to be on the cards. And I suppose this is where we start to look at, anybody that's into stocks. This is when you start to look at stocks and you say, okay, well, now we're in the phase of the cyclicals, because what's been happening is energy prices have been going up. So with energy prices going up, that means oil stocks and energy stocks like that should also follow. I'm just double checking. Yeah, I mean, BP surging back to the upside again, Royal Dutch Shell up to the upside again. So BP and Shell are big companies on the FTSE 100, so we're starting to see those longs push in. You've also got stocks like banks that will start doing well with taper talk, So these are two big players in the FTSE. HSBC actually currently down a little bit on the FTSE, but it is up from its lows. And I guess HSBC is just floating around break even currently because it's waiting for the Bank of England to talk about what they're going to be doing. And if they bring in a taper, maybe that's when we start to see things change on the FTSE. If they don't, which they kind of, it was at the point where it didn't look like the metrics would have been met in the UK. They mind you, in saying that, I didn't think they would have been met in the States either. But for some reason, they're saying they've been met, and maybe the taper kind of metrics need to be a lot more shallow than I would have assumed. Then we get the CPI.
I read the Fed statement this morning before I did my analysis. And I was surprised that the dollar strengthened on the back of what was said, because if I can think of the quote, Powell said, yes, the conditions have been met. If that's the case, why didn't they taper? And then he said, may soon be warranted. Tapering may soon be warranted. He didn't say it was. He said it may soon be. And they didn't do it. So WTF, it's all spin and garbage.
Well, maybe that's why the market rallied off the back of it, mate, because if I was listening to it live, and the tone that he was taking was effectively just about everybody else thinks that the parameters have been met. I want to see just a little bit more. We're going to be tapering at the next meeting. That was the long and the short of what was the tone of what was said.
So we had to know the tone. Okay.
Well, no, it's not so much you've had to know the tone. It's more the fact that when you get the press conference, that's when you really kind of get in amongst what happens.
Indeed.
And that's the thing about reading the speeches. But we only get really sort of the we get the kind of stop message that they're going to be putting across. But the message really was, it's happening. Next time round, it's happening. I mean, I agree with you. Why not this time? But I think there was maybe just a little bit of a concern with some of the situation that's going on, possibly with Evergrande, possibly with Delta. The coronavirus was mentioned quite a bit as well. But the overall tone was, things look like they are under control. We should be okay. Tapering at the next meeting is the state of things to come. Now that put that put my gold trade in all sorts of trouble. So I was in gold, and I got in right at the lows down here. But as soon as it came up here and I started to see this happen, then I got out of this area up here with gold, which was fine. But
that was a good decision.
Yeah, it wasn't a decision that I wanted to make, but I didn't really have a lot of choice, So and I'd only bought a couple of ounces, so it wasn't like I was in heavy anyway. I just thought I'd get a couple of ounces and stick it back, and if it made profit, I'd turn it into physical. I'd trade it and turn it into physical. But that opportunity wasn't given as we saw the dollar strengthen. But as the dollar strengthened, really the S&P was going in the same direction, and this is where things started to be a little bit confusing. The NASDAQ even more confusing, because the NASDAQ really is about growth. So people will go out of growth and potentially into cyclicals at this particular time, because money will become tighter. And when money becomes tighter, growth stocks don't tend to do as well, because they don't have the money to do the R&D and all that kind of thing. But the market didn't seem to be that concerned with it, and subsequently stocks moved to the upside, and we're still in this kind of relatively confident phase. Can
we read into that? Do you think that the market was, I guess, not pricing in, if there's such a way to put it, or was pricing in a no move, or I don't know what it was pricing in. Why did the S&P fall before the Fed statement, and now is on the rise after?
Well,
there doesn't seem to be a good reason for me.
Well, this is the thing, and this is why when we kind of get caught into fundamental discussions, it's absolutely not a kind of binary decision that you can make.
That's right. And hang on, I'll put my hat back on.
the reason for that is because we don't know what it is that the market participants are really focusing on to make the decisions. Now, what I've seen over the last few days is that the Fed almost had nothing to do with the decision making, because the Fed actually said something that should be negative for markets, maybe a little bit further down the line, but it should be negative for markets. And we haven't seen that come through. So then we go back to the Evergrande story and we say, okay, well, the probability is the market started to come down and come down hard because they were concerned about contagion. And China has managed to alleviate the contagion discussion, you know, but basically saying that there's nothing to see here, nothing to worry about. Plus the fact Evergrande aren't anywhere near as a bigger problem as the Lehman Brothers were. So we kind of knew that anyway. But I think that the probably the oil in the pond was probably the Evergrande story. But I think that managed to get swept up relatively quickly. So the Fed almost actually was a sideshow in some respects. You know, unless they were going to say something massively extreme, I think it became a bit of a sideshow. And I think that people are probably there going, okay, well, let's buy stocks for the next month, and then, you know, when the taper starts to happen, we'll start to think about something else after that as well. So the debt ceiling was talked about being heightened as well. So they've kicked a lot of stuff down the road. 20%,
the potential 20% correction is off the table.
From what we've got today, yes. The question is something else coming? Because the thing with the Evergrande thing is that, okay, that story has been kind of taken off the table currently, but it still matters, you know. It still happened. We've still got this contraction going on in Chinese growth. So there are things moving, I think, in the markets. There are things moving out there that would suggest that that a 20% correction may have been alleviated at this particular point, but it doesn't mean that we don't get it relatively soon. Dollar strengthening is not particularly good for stocks either, you know, certainly in the US. So that may well kind of like play out and have something to say about whether we get the 20% correction eventually. But I think we were all expecting it to be over this week. We were all expecting it to be an elevator kind of scenario. And the market does what it has been doing for a long time, which is buy the dips. And the 20% correction's only going to come when the market stops buying the dips. So I think if we look on the S&P, here, still pretty bearish. You know, is the 20% correction coming? It still could. And as I say, I think the Evergrande situation is a bit of an indication of what might start to happen over the course of the next few weeks. Because let's have a look at the trend line here. So this one's in now, no problem at all. This one's out. That one's out there. We got the lower low here. We're just looking for the lower high for the S&P to start moving to the downside. But really, you know, if we bring in the indicators here and bring in trend and bring in an EMA, this EMA, which is the 50, almost, I mean, not to the pip, but right the way up this trend has held there, broke there, but then it came back again and it held again there, it broke there. So there's a couple of moments which it did actually break. So what people are looking for is this, if they're bulls, and probably more something like, well, I guess that's as close as we've got in this particular area. But look how often this 50 EMA has been holding. really, really well. It's been held there, it held there, it held there, it held there. It's, you know, it's bounced every time. Now we're through it. So this area starts to become really interesting, the 50 EMA. If we bring in another one as well.
Actually, short underneath yesterday's bar makes a bit of sense to me.
Exactly, mate. Exactly. And this is the thing. I mean, you're going to give yourself a quite a wide margin for error if you go short under that bar rather than trying to short on the limit order. There's the 200, so that's no good. Let's change it to 100. That's where it stops. And look, if we look at the one, so the 50 and the 100 look like the two EMAs that are being reacted with right now. Yeah, bounced again off the 100 EMA, and this is where we start to see, do we get this kind of squeeze between these two EMAs? Because that's what we'd be looking for. And I think if we do get that, then we probably are then looking at the 200 EMA on the S&P. I'm just going to change the color of this just so we can differentiate between the lot of them. Let's make that green. Now, let's go back in time a bit as well. And do the same thing here. This is 2016. So anybody that's interested in trading the S&P for trend, look at what you're looking at. The 50 reacts here, the 100 reacts here, 200 gets broken through, but it does bounce back and then it reacts off the 50. 200 just about gets broke through, but it holds ultimately. But again, the 100, here we got the 50, doesn't come down to the 100 there. There's the 50, there's the 100. Here's the 200, the 200, the 200, the 50. So really, with these three EMAs, you could make a pretty good assumption about what's happening with with the S&P. And people have just been buying the dips. You know, they've been buying them here, and buying them here by the looks of things. And for anybody that is a dollar cost average kind of trader, then you just set your three orders. You set one there, one there, and one there, and hope this doesn't happen. I mean, that's COVID, but you know, COVID aside, I mean, we had another one here, which I think probably was trade wars. But if you were sort of like looking at this whole picture here, you would see over the course of 5 years, 1, 2, in fact, let's not even count these two because it bounced back pretty well. Definitely one there, definitely one here. So there's two. Really, two occasions where the S&P did not hold the EMAs. You know, I'm being a little bit generous over here, of course, but generally speaking, anybody dollar cost averaging is in Dandyland for at least sort of 3 years of each of these kind of cycles. And look at how long this one's lasted without a push through the S&P 200. This one's lasted ages, so we are overdue the correction for sure. Now, I just want to see whether. That's only going to be a 9% correction down to this particular point. So the suggestion of the 20% brings us below for the next time, you know, and I think we are due it, as I say, mate. The last one was back about a year and a half ago now, and it's been nowhere near the 200 EMA really ever since what's that, March, ever since the coronavirus in March of last year. So we're definitely due it, mate. But you know, these EMAs are probably all you need on your chart. Now, I don't know. I haven't looked at the Nasdaq, but I suspect it's probably quite similar. It looks pretty similar here. And again, dollar cost averages are having a field day as long as they don't get caught out here or caught out here. But otherwise, you know, this one's even better. The way this one holds is really, really nice.
Yeah. I mean, of course, mate, we are talking about an unprecedented trend, of course, and that's why we're seeing what we're seeing. And who's to say it's not going to continue? Not me.
Yeah, absolutely, absolutely. And you know, the other thing is that what this also tells me, just looking at this very, very small kind of data set, is that when the 200 EMA gets broken down and then it bounces back inside it, then you can DCA for quite some period. Same thing happens here. Breaks down, breaks back inside it, bounces off the cross. you know, it's the lovely little golden cross. So you wait for your golden cross, and you can DCA right the way up. You know, it's almost a really simple strategy that you could take, which would have worked at least twice over the last 5 years. Now, you'd have to go back and check the data set and see whether it worked continuously. But certainly looking at this looks like something that you would, you know, then go, this is of interest. This is a strategy of interest. Really simple as well, isn't it? But really, you know, relatively clear over the last sort of like 2 runs that we've had.
Yep.
Anyway, mate, so we are now in this phase that that I would suggest that that the FTSE 100, which you know is my my weapon of choice, is untradable to the downside at this stage. But I don't want it long. You know, who wants to trade it in this sell zone up here? Not me. You know, it's just not. This is not palatable for me. I don't like it at all. And we could sort of bring in some other charts here. You can see there's a little bit of weakness. But
there's a lot of support.
But there's a lot of support. Now, you were talking about the MPC later on. I think David's also brought that in. So the shorts are going to be under. The problem is going short here would be probably too dangerous. So I'm waiting for it to break under here, and if it breaks under there, then I will be I'll be interested in the FTSE for the short. Signs and signals aren't really suggesting that, and if we kind of like bring that in with the pound, then the pound's in a buy zone, and we talked about this, didn't we, at the start of the week? And you were saying about it coming down here, and I was quite keen on the long from this particular position.
Yeah, it hit our target.
It's hit the target, yeah, which is great, and I this really all hinges on what do the Bank of England do now. Now the Fed have kind of shown cover, or blown cover, I should say. Do the Bank of England kind of do the same? Are they in a position to say we are also going to start talking about tapering? Because really, you know, the planet cannot survive on the current monetary system or the current monetary policy that we have. The taper and the rising of interest rates has to happen. And, you know, that's something else that Jerome Powell said about the difference in, I think they're pushing out the actual interest rate hike, maybe once next year, maybe, you know, 3-4 times in 2023, which is another reason the market probably wasn't so spooked. But that can change, you know, that they are kind of concerned about inflation and everything else. And honestly, man, I think this animal's got away from them. I think that they're going to be in all sorts of trouble over the next 2 years with the debt ceiling being raised. Yeah, 300 trillion and counting, John's saying, which is just, I don't know, how do you manage that stuff? You know, how do you continue to print and buy assets in this way? And
I'm sick of staying it, mate. I'm really sick of staying it.
Yeah, well, and expect and what happens if interest rates get risen and they raise the debt ceiling again to try and sort of alleviate the fact that they're going to default on their debts, and it just goes on and on and on until it can't go on anymore. It's not. I'm not comfortable with it at all. But we're in this transition phase, and
is that a fuse I can see burning there? I think it is.
Yeah, I just don't know whether at this stage. Fortunately, I've done my money for the month, so I don't need to trade anymore for the rest of the month. Not that I won't, but I did wake up this morning and think, I wouldn't mind just having one day where I just leave things alone and let the Bank of England come out and say their piece. Now the Fed have been out, get through today's news and data, and then maybe come back tomorrow and see if there's something going on that's going to be a bit easier. Because I think there's going to be a bit of a tricky day to pick the direction, even for just a few pips for me.
Yeah, so, look, busy day. There's a whole lot going on as well, news-wise. So yeah, I can totally get that. David's very keen, by the look of him, to get into the market here. Have you got what is ripe?
Ignoring the pound dollar, ripe long on the day. Rip long? Maybe means maybe there should be a question mark. David. Could be a question mark after pound dollar. Ignoring pound dollar, question mark, rip long on this daily chart. Maybe that. I don't know.
Unless is ripe a company on the FTSE?
No.
No?
No, not.
David, what's ripe? apart
Now
from the market for
you,
picking.
would I be right in saying, mate, that you would be quite keen on this if it was to do something like this over the course of the next couple of days? Well, if it manages to kind of like get a bit of a pickup today up here, and then come back, test this area here on the trend line, would that be an area that you would say, you know what, I wouldn't mind going above there?
Yep, that works for me.
Okay.
That does work for me. I still think the euro is going to be a tradable commodity as well at some stage, but not just yet.
Okay, so
and look, as Jira's not in the room. Jira nailed this the other day, and I know that that's been assisted by the FOMC statement. But he was pointing out. Are you done with your screen, mate?
Yeah, I am, mate. Yeah. Let's go. See what you got, because I've got a bit of analysis to do on the FTSE here.
And David, you need to tell us what ripe is. Okay. Jira is pointing out to us must have been on Tuesday when you weren't in the room. He's a great analyst, Jira, and he does correct me at times. And I didn't act the way I should have to his suggestion, because I was hell bent on seeing price on euro dollar get back and retest or test actually the weekly pivot before it went short. And as I say, the FOMC statement aided and abetted this short. There's no question about that. And I missed out on my first take profit here, which is, of course, what caused me the loss. But, you know, the analysis is 100% spot on and exactly the way I trade. So I should have been looking for a short rather than long. And I was from here, to be honest. But I wanted to see a lower high, which hasn't come. Maybe that's it now.
Sorry, mate. I'm going to take a short on the FTSE.
Okay.
So after all that stuff, actually the conditions look okay here for a short, which is the direction I want to go in. And because we've got because we got the Bank of England, I quite like this. I'm just going to quickly share it, mate. Sorry to butt in on you again. It's just I just
no
saw
problem.
it and I thought, and by all means, take the screen back.
I'm just trying to make myself feel better for a losing trade. That's all.
So yeah, shorts are on. I think the shorts are on, and I think they're okay here. Now, if you are a stop user, then obviously your stops are at the highs, which gives you a 28. Now, this is the area that I'd be looking to take profit. So if it comes down to this trend line and this horizontal level here, then I think that's the take profit area. So yeah, I've just taken the short. Now, you know, by all means, do your own sort of like make your own decision on this stuff. But I think there's probably just enough weakness just to say, you know what, we could get a drift. We could get a drift into the Bank of England statement. So yeah, if you're a stop user, as I say, stops are probably at the highs here. Where stops are at the highs, you wouldn't want to kind of get involved in this if this goes too much higher. Stops at the highs, and then you're drifting down, which could be, so you're looking at around about just better than a 1-to-1. Looks like a 1.2-to-1 or something like that trade. But yeah, I just wanted to share it, mate, while I saw it.
Happy days. That's it, mate.
That's it. Yeah, back to you.
All right, we're getting very, very close to quiz time, but I haven't done the euro. Haven't done the euro yet, and I just want to finish off this analysis. You know, I'm always banging on about market structures and all the rest of it. It is a little bit confusing right now because you've really got a range in here. And this is what I was also trying to play. And I haven't got a rectangle around it, but you can see in here that we've got equal highs and equal lows. So there's your range in there. Question mark, which one is the more powerful? Is it the rectangle or is it the descending channel? Great question. And I think what we were talking about before in this transition period, Ash, is probably exactly what we're seeing here. I'm not sure now. I've got doubts on which is the stronger, because the rectangle is telling me look for a high or low, and the channel is telling me look for a lower high. That kind of makes it very, very difficult to have a directional bias on any given day. So I think we need more, or I need more information. If I'm to trade long here, I need a bloody good reason, and I haven't got it on the daily chart right now. I simply haven't got it. 4 hour, if I dig down a little bit deeper, is still not giving me the right to go long. Not even a clear reversal pattern. That's one of your failed morning stars, isn't it? That pattern.
Yeah, yes, it is a failed morning star. Yeah, yeah, I saw something similar yesterday on the FTSE, and it did hold. So it's usually a pretty good pattern. It's
Well, that tends to go along with this: lower highs and lows, breakout to the downside, retest of that. That would make sense to me. More than a long right now. But do I really need to trade right now? No.
Well,
so I probably won't.
sorry.
What's ripe, David? Tell me what ripe is. So yeah, euro today. If I'm 100% honest with myself, I was looking for longs earlier, and now, having done that analysis again, I've got no idea. Absolutely no idea where this is headed. Sorry, that's not true. I've kind of reversed my thought process. Of course, that's FOMC, which completely throws a spanner in the works, because I think there's two reactions in that candle. One is knee jerk. In fact, I think that's all knee jerk. This is more considered, I believe.
Well, there's going to be people now positioning for the next meeting, aren't there? And I suppose that's why we've seen what we're seeing. And the numbers become really important, jobs numbers. But one thing Jerome Powell did say as well is that when they said, is there a jobs number that could come up that was to change your mind? And he said, not really. As long as it's a steady job number.
Yes, as long as it's reasonable, yeah.
Yeah, as long as it's reasonable, we'll be okay to taper. So the jobs number would have to be pretty atrocious. And I guess now people, as I say, are positioning for an FOMC taper, and then because they're going to move next, I think, then we're likely to see the dollars continue to strengthen into that meeting. I mean, the numbers do become important, but it doesn't sound like they're anywhere near as important anymore. So I guess the speculation right now is that the dollar is going to be higher than it is today, regardless of where you get in now.
Well, there's the dollar there. And it does look a little bit different than the inverted euro, which it shouldn't.
What is that like, mate? What's that like on a monthly on the dollar? I just want to see sort of what sort of zone we're in.
Well, it's broken the trend line, see.
Yeah.
But it is at resistance as well. Okay, it's not the strongest resistance level on the planet, but let me see if it's got any. Yeah.
Oh gosh, yeah, that's got some room as well.
Yeah, you got to be thinking it's possible to put in a higher load up here somewhere, a lower high up here somewhere, isn't it?
I think so, mate. Yeah, I mean, if you see that trend line as well from is it December 2010, December 2010 lows
up here?
Maybe the next one up. Yeah, maybe there.
You like to go through the bodies, don't you? So you're in there somewhere?
I think so. Yeah, and that's the yeah. It's somewhere around there, isn't it? Oh, it's a tricky one, that actually. If you go a little bit higher, so you're taking in the lows of that one there. That's what I would look for, probably. I think that probably looks a bit cleaner.
Still got to get through there, in my humble opinion.
Yeah, I think you're right. It's got a few to get through, isn't it? But yeah, I think the dollar could get up there.
Yeah, but it has got through the most recent trend line. So as much as I hate to say it, it is quite possible for the dollar to rally. That said, if it fails at this level, then we're headed back down here as well. So you meant there's a long bubbling up. ripe. Okay, ripe as in ripe for the picking, perhaps.
Ripe for the picking, yeah.
A long bubbling up on dealing with negative swap, and it's really not. No, negative swap is not nice if you've got a large position in particular. So you're looking for pound long. Right. Okay. So we've actually addressed that. Cool. So we good, David? You've got our ideas on the pound. And of course, today is crucial. Absolutely.
Today's crucial, yeah. And really, you know, the pound is no doubt the pound is in a buy zone. You know, you are looking for the pound long, technically speaking. But they do have to follow the Fed. You know, if they don't come out and say anything quite as positive, or well, if they don't come out and say anything positive, I think the pound might well suffer in it, and it'd be completely the wrong trade. But the conditions, you know, were for bullish pound. Really, that's where we were. You know, we were in a pretty good place for a bullish pound. The talk of taper, as I say, the bar looks to me like it's quite low for these countries and these central banks to start to taper, and it probably has to be because inflation's getting out of hand, and particularly over here, you know, we've got all sorts of problems with energy costs. So I think they've got to say something, and you know, because we're in this buy zone, there's certainly going to be speculation, but we're going to be very careful because if they don't deliver. Then those buyers are going to get swept aside pretty quickly, I would have thought.
Yeah, it's actually delicately poised here.
Yeah. I think you can wait for the statement, though. I mean, it's, you know, because we're down so low, I think it's okay just to wait and don't trade into it.
Yeah, look, I'm okay, but David's got a bit of an issue. He's in and getting negative swaps waiting for a long.
Oh, I see.
That's the problem he's got. Tough to advise. It's really tough to advise you.
Now. When you get yourself in a position like that, it's one of those things that if that's the path you've chosen, in some respects, you just don't want to look at your trades all day and just come back and see how it turned out. You know, as long as you can afford to do that. But if you watch the charts, this is where the psychology really starts to play havoc with you, and then you make decisions that you probably shouldn't make. So if I were you, I mean, it's difficult to advise you what to do, but certainly if I was in a situation like that, I'd try and do my analysis without any kind of emotion, and then say, that's what I've decided. You know, whether stop losses are here or take profits there or leaving it alone is the answer. I would decide to do that, and then I would switch everything off and then come back after the statement's made and see what happened.
Yeah, the news does confuse you a whole lot, as it did with me in the FOMC yesterday. When at the end of the day, I did exactly what Ash is talking about. I did nothing, just walked away from it and just okay, fate, let it fall on my head, and and it did. But yes, you must have a plan before you enter a trade rather than midway through it, because the last thing you want to be doing is trying to make decisions whilst you're in a trade, because your emotions come in.
Yeah.
And that's not what it's all about.
Yeah, agreed.
Speaking of emotions, we've got musical emotions moving in our way, and it's quiz time.
Yeah, let's do that. Here he is.
There's no emotion moving on this side of the planet. I'm loving that hat, though.
Yeah, well, I deserve it today. I should be wearing the hat and taking it off every now and again. Time solves that, John.
I'll give it on the zone. Oh, well.
Do you know what, John? You should have a quiz master's hat, really, with a big question mark on it.
Yeah, I think it's a big question mark of saying, why did I get out of bed today? It's not that bad, I don't think. Okay.
I better take it off now, otherwise I'll lose the quiz.
Right, let's make sure we're answering the right questions to everybody. Don't send them to me, Jeff.
No, okay.
Here we go then. It shouldn't be too bad this week. Which property developers had the market to?
Oh, hold on, we haven't got your screen yet, mate.
Oh, my apologies. You've not.
That's okay.
I've not done the. I've been a bit secret squirrel then.
Yeah, I mean, it's doesn't bode well.
It doesn't, does it really? Trust me, I'm a lawyer.
Let's have a look.
Yeah.
Okay, I've got a chat.
Oh, here we go.
I've got a Zoom. Oh, look at that! I've
Oh,
got it all.
where's my chat box? I've lost my chat box.
I've got a chat box. I've got a picture box. Okay, at least Zoom is not done me over. For once, Zoom's on my side. It must want something out of me.
I didn't know, so I'm not going to copy anyone. I didn't know.
Yes, it
Hang
is.
on, I haven't. The hat's not too far away.
That's not okay. It's a good start for everybody. I mean, I've watched this with fascination because I got stuck into a story of.
You can't leave the music alone, can you? It was fascination.
You can get a song title into every line. What was the other one? When you guys are talking about the trouble with your trade, I'm giving it. There could be trouble ahead. I thought, don't want to get everybody sued. No, the amount of jobs that are under fire in other companies that feed.
Oh.
My brother's a builder back in the UK.
Right.
And he says that a lot of the time the big story isn't the one that's going under; it's everybody else who's going under because they are not being paid by them.
Well, this is the point, isn't it, mate? And this is why we were talking about the contagion, because what's happened is that there are companies that are reliant on Evergrande effectively kind of like paying their way so they can get paid. And while they're not getting paid, they can't pay their suppliers, and it goes back and back and back. So yeah, the fact that you've got this, and it's the biggest property company in China, so it's not a small company. It's just probably not as bad as it's not as big as Lehman. So I think relatively speaking, it's probably not going to cause the same problems. But it's still, if this does start to manifest itself into something more problematic, then there will be contagion. But I will go back to Greece as well. We had a whole country in all sorts of problems, and they managed to control that. So they've always got some magic up their sleeves.
I hope so.
Well, they tend to.
This might be a bit tricky one. This is this week's tricky question. Which NFT project aims to help the women of which country continue to get their education? There are 2 points on offer. The first point should be reasonably straightforward to grasp. The second one won't be. I think you've got to be a bit of an NFT geek.
Yeah, I think. Yeah.
The first one you might be able to get.
Country.
Yeah, it's pretty relevant right at the minute. Well, maybe, I don't know. I couldn't comment, Jeff. I don't know.
No idea either,
I don't want to. I don't want to do a Boris Johnson and Joe Biden and annoy the French.
I tell you what, Jeff, that's a great name for a coin.
Yes,
I was thinking that.
John Cook.
I shouldn't have released it, should I?
John Cook
another one.
has got it. Bookblocks.io.
Okay. No, I've not heard of this story. I've not heard of this story. See, this is why
it's Coin Telegraph, so it might be a little bit under the radar, but
John New, yeah,
John
good one,
Cook,
John.
yeah. I mean, for me, my wife works with a project out here with Afghan refugees, so I found out about that.
Right.
Which famous inventor passed away this week?
There was a.
Yeah, I mean, he.
Oh, hold on, I think I know.
Famous for two things. I used one of them, and I actually wouldn't have minded getting the one thing. Oh, yes, that is correct.
I thought, I remember that story.
So who's he?
I
assume it's a he.
Yeah, Sir John.
Sir Clive.
Sir Clive, yeah, the old electric buzz machine. So maybe
The only Sir Clive I know is Clive Aussie. What's his surname? Clive.
I thought you said you knew him.
Yeah. Well, not personally. he had a comedy show, like a news.
Oh,
Alan.
No.
Anderson.
No.
No.
I'll think about it. I'll get it.
I know the guy you mean.
Yep.
They used to do challenges, didn't they? They used to have what are they called? Endurance challenges. The Chinese used to send endurance challenges in parts of the TV show, right?
I must have missed that bit.
I think it might. If it is Clive Anderson, no, I think John might be right.
No, it's not.
No, it's not. Okay. When paying fat sums of money doesn't always pay off, which English football club felt that last night?
I'm guessing.
Oh yes, Jeff's right on it.
What do you do? What do you do wrong?
Well, it cost him 72 million, and yeah, he just
that's the first thing he did wrong.
Clive James?
That's it, Clive James.
That should have been the question. Follow-up question: how many Clives do you know? Yeah, 72 million. And, the ball wouldn't go in the back of the net.
Bugger, eh?
I always like it when things like that happen. More money than sense.
I was worried about my 0.5% on euro dollar. Shivers.
Yeah. Well, there you go. You're feeling a bit fresh now, Jeff. It's okay.
Yeah, I'm awesome. I'm on top of it now. I'll have a wine later.
I then place the trades. No, I'm not going to do that. I might get this wrong as well, but there we go. The reason I've gone for most of us have those on our charts is obviously some of the professionals in front of me sometimes do not have these on their charts. They go completely SAS and don't have the stuff. They already know it. So there's a point for everyone. They're all pivots.
It's too much writing, John.
It is.
I know it is. Yeah, bang. There you go. There you go.
We'll just copy that and put it in.
Yeah.
It's too much writing, man. I can't deal with it.
Too much writing.
Copy and paste.
Just press a button. There you go. Jeff's on it. He's gone.
Well done, Jeff.
Okay.
5 points. I'm the only one. Oh, I'm
you got
front.
5. You're gonna win this.
Jeff,
week.
you're getting all of the points because you
were lazy.
Speed typer.
I did feel for you when you were in that trade because I thought, I was going to take that one, but I'm under my own water at the minute, so.
We'll talk about your underwater in a moment.
Oh, I don't mind it. I was like you guys. I thought, right, I'm in for the pound long. Stand against the Aussie, but I'm counterbalanced on the other side. I'm in on what is it? Oh yeah, I'm on a CAD short against the New Zealand dollar.
Okay, you got a bit of a hedge.
Yeah, a little bit. Okay, which underwater deal has got friends and allies all pointing fingers at each other? Yeah. It's great.
One of the reasons I find it very difficult to go along the Aussie at the moment.
But on this one, you see, the French should be sent. They don't live in a glass house because they pulled out of a deal with the new aircraft carriers that the Brits have got. Because we should only have one. We've got two because they wouldn't buy one. They wouldn't. They pulled out. They pulled out the.
Yeah, deal. They did. You're right. I mean, this stuff happens all the time.
Yeah, they're all in that. They're all in that house. I find it very funny.
They're extremely pissed. I've got to tell you.
Yeah, they're not happy, mate.
The problem with the French is they can't have their usual riot at sea because they haven't got enough navy to have a riot at sea anyway.
This stuff's inevitable, isn't it? As the UK tries to plug the hole that's been left by the EU, they're going to put a lot of noses out of joint. They tried to do. You know about the other deal that they tried to do with Mexico, the States and Canada. They tried to join the North American Trade Pact, which is completely laughable, and it has been laughed out of Parliament or wherever else it was, laughed out of the room. But they're trying to do all these things because Britain are in a bit of trouble. And as this goes on, there's going to be, as I say, there's going to be rifts going on all left, right, and centre. I think ultimately it probably smooths itself out by the UK doing another deal with the EU. Whether that's joining or not, I don't know. But it needs to kind of
in the end, they'll have all thrown so many stones that they'll have to all repair the greenhouse again.
Yeah. Gary's saying in the mid-70s, France pull out of NATO for a period. Exactly.
Oh, they did. Yeah, the French didn't want to have their nuclear deterrent under NATO control. That's
And
what
in the
that
mid
was.
40s, they got their ass saved by a certain alliance as well.
Yeah. It just,
Yeah. Always goes on.
they're all on it. This is. Oh, there we go. Yeah, that's it. It's the same.
It's actually not how they quote it, is it? But
No.
it's correct. They quote it 0 to a quarter.
Yeah,
But-
the lower end of 0 to a quarter.
Yeah.
Yeah.
And then this week's music question is.
I better
not-
put it in, otherwise I won't get a point.
You've got to get it.
And you're ahead at the minute, mate.
That's right.
Well, it's got UK MPs all jazzed up, apparently.
Oh. Oh gosh.
Speaking as, this is part of my trade, I'll be amazed if anything actually positive happens out of it. But, it's nice to
I've
think
just got
that.
UK MPs all jazzed up at the moment. Dun, 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 dun.
Oh, yeah, Jeff, I like it. You're in.
Dun, 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 dun. I got no idea, mate. That just
No, most of
spewed
the
out.
musicians I work with have got no idea either, but you're in the band.
Is that the Glenn Miller? Is it Glenn Miller?
He's just sung In the Mood by Glenn Miller. Yeah, but it's not. But I'm impressed with that. A good right pitch as well. This is apparently they're asking for a bit of an inquiry,
Ah,
and they're asking for the inquiry not so, on the streaming services as to who's getting what.
Okay, that's interesting. I mean, I don't know where. Well, so they're pushing what the likes of Spotify to pay better.
I think they're either doing Spotify to pay better or the major record labels to explain how they're working these deals out.
Right.
I don't know whether anything comes of it. I don't know.
Universal just floated in Amsterdam over the last few days as well. So, and a friend of mine works for Universal, and I was talking to her about NFTs, and I was saying, I was talking to a friend of a friend about NFTs, and I was saying that the NFT sort of space could save the music industry because if you buy an NFT of an album, you then can't you then can't effectively copy it, or you won't copy it and sort of like pass it on to other people. And she made a really good point in saying, yeah, but it's just going to really annoy people that have not got the access to NFTs. And if you want to own somebody's album, you won't be able to own it unless you have access to the to an NFT space, which I thought was something that I hadn't really considered. So she said that they are looking at NFTs, but they're going to be looking at NFTs for extras. So it's going to be sort of like extra gifts rather than actual album sales just being done through the NFT space, which I know Kings of Leon have done, but there hasn't been a massive take up for it, and maybe that's why, or maybe Universal are off the boil. I don't know, but that's not what Universal will be doing. So maybe the music industry will go down a different path than I thought. Anyway,
I might do. Yeah, I know that the album releases that I've been involved in and are doing. If we don't go through major labels, obviously distribution. Well, nobody gets physical CDs anymore, so there's not so much need for that. And if going into a studio is cheaper now.
Yeah.
Yourself. So you can actually use it more of a, I don't know, some vehicle for advertising, but it's still it's still the streaming thing, because Apple would like you to buy into their streaming service, not buy the albums. So I used to buy the albums on Apple, but not anymore.
So well, thank you very much, John. I'm presuming that Jeff has won because he was the only one who could be bothered to do the
put the 5 in.
He's got to
Only got one other
speed
one.
up the submarine deal.
Speed typer, mate. Unbelievable.
Yeah. So we'll probably need to crown you the winner this week, Jeff. So as we are just about to wrap it up, anything you want to look at, John? Anything you want us to have a quick look at from our end?
It's somebody. I'm in the New Zealand CAD short, and I've been in for 3 days.
Okay, and is this more of a slingshot, or is it?
This I took as a hedge against another trade that was going slightly wrong for me.
Is that the pound Aussie?
Yeah.
Okay. Do you want to look at it, Jeff, or shall I look at it?
You go, mate. I love Kiwi CAD. Did from the start.
Armenian light. Well, I'm very, very lucky in the best of both worlds because you do your own analysis, get out, when you get up, sort of that, and then I get Jeff's update in the morning, and usually they sort of then correlate, and I'll have a quick scan for a few things. What's my thought is that eventually, when things open up, I could be wrong. Oz, the Kiwi can't afford to be so strong.
Yeah, it's been on fire, and oil have a lot to say about that. But in terms of the CAD, but the CAD, I like the CAD, I really do, and I think the Kiwi's overbought. And I think I demonstrated on Kiwi CAD weeks ago how long it had been on a bit of a tear. I think a lower high on this gets you in again, John. I think you can scale into this with a lower high. So I pull back to maybe the daily pivot or even the weekly pivot.
What am I looking at? Yeah.
So I mean, this is a bit of a problem on the weekly. These are always a little bit negative, but let's see what we got. I mean, it is a pattern which is kind of in the middle of nowhere. So that's the one caveat to that, and they don't tend to play out. So let's take that away and not consider the diamond. High, low. Oh, it's all over the place, isn't it?
It is. You're in this already, John, are you?
Yeah, I don't want to put I don't want to put the muckers on the thing later on, but I'm coming from the fact that they left the Eurozone, and I'd like to think that they got to sort it out. Does that make sense? They got no choice but to sort it out. So I think that, speaking to a couple of friends in the UK, that maybe the numbers later on might not be as bad as people make out.
Do you know yeah, I mean, the issue that I've got with this is that the longer term time frame is showing downside. And we might have had it. That's the one caveat, is that we might have had it here. We might have had the retracement. So if we were to take these away for a second and bring these up, there's obviously this going on, and we're in that right shoulder phase. And I always think that it's best to try and pick it up on the right shoulder when it goes through a trend line, and then you get that sort of that kind of trend line there. So it looks like we're in the top of the trend line as a potential resistance. But as I say, the one sort of good thing is that it looks like it's kind of tested. It's tested this area here somewhat. I
mean, it's not a big position at all.
Oh, that's I think it's okay, mate. I wouldn't be looking at the longs personally. I think that's the thing. We do have this statement out later on. You definitely want to take these highs out, and if it can take those highs out, which it's not that far to go, but if it takes those highs out, great. Then it's potentially going up here.
Yeah.
But I do think that you'll know probably by the end of today whether this trade is going to work out or not. If it doesn't take those highs out, I would toy with maybe trying to pick a new spot below it for an entry. But yeah, so Jeff, you like the CADs, the Kiwi CAD, is it? Yeah, Kiwi CAD.
Yeah, just stay on that chart for a sec, mate. Sorry.
Okay.
John, this might make you feel a little bit better. 4-hour chart. 4-hour chart, mate.
Yeah.
If you draw that trend line that's coming down from the top,
okay,
you've got 3 classic slingshot candle patterns: the top one, the middle one, and the bottom one. So they're all suggesting that if price goes back to the top of those seller bars, it will smash through.
Okay.
It doesn't mean they will.
No,
It just
I'm a little bit more. How many more months in? I can't remember when we started now. It's got to be over 15 months. I'm not as bad as I used to be, exploding all over the place like a strawberry when things were going wrong. Because
Yeah.
I went to bed last night and got up this morning and go, oh, I didn't expect that to happen. Oh, never mind, fair enough.
Yeah.
That worked out in my favour. And now I realise that me sitting in front of the computer has no effect on what's going on whatsoever. Once I've actually done,
there you go. That's a good realization.
Yeah, once I've done my deal, once I've pressed a few keys, that's it. You know, but it's taken quite a long time.
So you actually don't think now that Bob Broker's got his eyebrows over your shoulder, just
No,
waiting for you.
Do I think? Look, I mean, obviously, you can. There's bigger things at play, and if the momentum is against you and it's going on, and there's certain times in the market, you can. I wouldn't say you can. You can never know what's going on, but sometimes it's like yesterday. I thought, oh, that's going to come down and hit that. Yeah, that's going to take that out, and it's going to go back up, and it did. But that's only because momentum. I could see the momentum. This was the pound Aussie last night, straight down, hit the WS1, came back up, bit of a retest, hovered around, and now it's dropped again. So, you know,
the one thing I can tell you for sure, it's not your wishing, hoping, sweating, praying that makes the market move, mate.
No, certainly not. It's not me cleaning my computer either.
No.
No, but it's like I explained to my wife. Well, no, she explained to me because she's got more brain power than I have. She said that you didn't become a good musician overnight, and I went,
yeah,
okay, all right.
It does take a while.
As soon as she said that, I went, yeah, okay, I'll go make a cup of coffee.
This is true, man, and it does take a while. And I think when it comes down to trading, it's obviously one thing is seeing the patterns is really important, but you're so right. It's the mindset which is the key. If you can get your mindset right and you have your the right internal speak, you're in the right shape.
When I first heard you people saying that, I mean, I've got a degree in psychology, which shows how much that's worth. But I thought, what are they on? What are they on about? And then I thought, right. And now, actually, I get it. But to explain what that is to somebody who, when you say it, so you've got to get your mind in the right space to explain it. Really difficult. It's really difficult. It
is really difficult, actually. And I wonder whether I don't know, because there's obviously sort of like people out there that run trading psychology courses, and like you, mate, I don't know where they really get in amongst it unless people have traded. How can you get somebody
totally different?
Yeah, than anything else.
If this was in the trading psychology courses, my, the professors would be completely blown away.
Yeah.
By it. What does fascinate me is how you guys see the patterns. When you say it's a sell zone or a buy zone, and I'm looking at it, I'm giving it, that's a bit clever the way he's working that out. And then Jeff works out it's simple. This is a higher low, and this is going to this it, and okay, and he puts it on. I'm giving it. Okay.
Do you know what?
It's taken a long time to learn.
Well, I think, mate, what everything comes down to, really, I mean, we can use as many indicators as we want, but it all comes down to support and resistance, doesn't it? And if you've sort of, all I'm ever doing is I'm going, well, there's a level of support and there's a level of resistance, and then changing your time frame to saying there's another one there, there's another one there, there's another one there, and then you're just sort of deciphering which time frame am I trading off. Then the indicators come on later and sort of say, is there anything that backs up the likelihood that it's going to go from this support and resistance line to this support and resistance line, So if you were to break down trading into its most simple forms, then I pretty much think it's that, it's just sort of like finding where it's supported and where it's resisting and trying to trade between the two levels. And you're just picking which time frame of levels that you're going to trade between.
And seeing your own thing is really important, because everybody that's ever learned out of a textbook about chart patterns, candle patterns, are going to see very similar things. But once you find something that you see that is not evident to the textbooks, I think that is absolutely crucial. You can use the textbook patterns absolutely, totally, all the time. But when you start to see something that is not necessarily in the textbooks, I think that's you've learned to read. Then I think.
Yeah, I mean, I use the Wave Rider. What is it? I use the scan similar to you, Jeff. But other than that, I don't use the indicators. I never really did. I didn't.
Well, I think, for someone like you might find it doesn't really suit you, because that's what I found over time, is that they're having these kind of strict things that kind of had to happen before I could trigger a trade. Just it didn't really suit me. I kind of like had a thing where what I'm always trying to do is trying to decipher buy and sell zones, obviously, and is it likely to go through this buy and sell zone, and if I don't think it will, then I short it, and if I think it will, then I go long, which if my psychology with the FTSE effectively is I think it's probably going to be somewhere around here. I think it comes down and tests this area, this obviously, I don't know if it's obvious, but it is a sell zone. It's still currently a sell zone. There was the last area of resistance there. So this is still a sell zone. So I'm just looking to take a little nick out here. And we've got this Bank of England's statement. So I'm thinking, well, why would the market buy up into a bullish territory before we have something so significant? And I can't think of a reason why, so I'll sell it. And if it does buy up, then I'll look for the next point and I'll sell it there. And if it does continue to buy up, then I'll sell it there. Unless by the time it's kind of up here, the terrain has changed. So when you're talking about hedging, I won't hedge until what I thought was going to happen hasn't happened. And this is where the whole argument of stop losses and stuff comes in. So I don't care about a stop loss here, because to my mind, my reason for entering the trade still exists. Now, later on, when the Bank of England have been out, then it's possible that reason's going to change. They might come out and say whatever, and the market gets all of a sudden quite bullish, and that's when I'll hedge. I'll keep the position open and I will hedge it. I'll hedge out the risk, and I'll hedge out the risk until the next thing happens, and the next time that I can say, this time I think it is going back, or this time I think we continue to go long. So I'll almost kind of refresh the trade from there. And at some point I'll be right. And as long as I don't over leverage, then I've got plenty of room to be right.
Yeah.
I actually love that more than anything. If the market or price, whichever you want to call it, doesn't do what you expect it to do as a result of something, be that a technical setup or be that fundamental announcement, news announcement, whatever, if it hasn't done what is expected of it, then guess what? Something else is going to happen, and probably the reverse. That I love more than anything. Yeah.
And that's the time you've got to take action, isn't it? I mean, what I won't do, and as I say, this is where the argument of stop losses has to come into play in a way. What I won't do is just ignore it and say, I was wrong. Let's hope it comes again, round again. My hedge is like my stop loss, but I much prefer this kind of soft idea of a stop loss or a protective measure, rather than this hard, fast level that goes, that's where I should get out, and that's where it's no kind of sway on anybody else. That's just not the way that I like to do things. So I prefer to leverage less or leverage zero, and come in and make a decision after I'm sure that things have changed, rather than I think that they might have changed.
Nice one.
Well, actually, sure is not a word you can use in trading, but closer to. Okay, mate. Well, should we wrap it up? I guess. Is there anything else, mate?
No, thank you very much. I love it.
Brilliant. Okay.
It's a good week. Shoulders on the men, so I'm fine.
Brilliant stuff. All right, that's good. That's good to hear. Okay, so we'll be back next week. Now, Jeff, you have got nobody in Tuesday, have you?
Next Tuesday, not at this stage, no, but
Okay.
I do have the following week, and I'm sure these people will love to see Dr. George in the room.
Brilliant stuff. Should we have a week together next week? Just for a holiday?
If you can, yeah, sure.
Yeah.
No,
all right, let's
no
have a week
problem.
together next week.
All right.
And you know, that's this is our idea with trading buddies. We'll just take it as it goes, and yeah, we'll be buddies all week next week. Then I'll be in with you.
Well, you know how we always wanted to get Boris in when something's happening, or whoever the chair of the Bank of England is, if there's an announcement coming up tonight. What's wrong with these people? They keep refusing to answer my emails.
I don't know, mate. I don't know, but it's exciting that we got Dr. George. You're absolutely right. So Dr. George is a bit of a Euro specialist, isn't he?
Trades the Euro and gold, I think, and the S&P these days on 5-minute charts.
Oh, I'd quite like to hear his opinion on gold.
Look, if you've not listened to George, he's amazing the way he goes through his 5-minute charts. He's got an absolute dead set system that he doesn't waver from. And if you're talking discipline, as we do, and I'm not the best exponent of it, I'm pretty good, but sometimes, like yesterday, I'm ill-disciplined. I don't think I've ever seen George be ill-disciplined in his current form. Maybe in the past, I've seen him do a couple of things, but I don't think I've ever seen him err from what he does. And
mate, and it's a lesson to be learned, isn't it? Because I think my issue a few days ago was a lack of discipline as well. And I was lucky. I know you weren't so lucky, but I got lucky on getting out. But yeah, ill discipline is when you get caught on the wrong side. When you get caught on the ill discipline, when the market is actually going against you as well, then I should be wearing the same hat, mate. I just got lucky with mine. But you can be ill-disciplined and it works, and ill-disciplined and something else happens and you're in all sorts of trouble. So yeah,
you'd like to think that balances out, but the trading gods have other ideas,
Yeah. It's I always find with the ill discipline, the reason to avoid it is that it's just work. I have to work. I had to work hard the last few days, and it was because of stupidity, really. But yeah, I got lucky, and to have somebody in the room, as you say, George, that is a great example of somebody who won't break that. Maybe we'll be all better off for it. And I think he could be the perfect answer for Tuesdays.
I think it's a great lesson for all to have that. And yes, tune in on Tuesdays, guys. He's not next Tuesday. Ash and I will be chewing the fat, but the Tuesday after that, George will be joining me, and looking forward to it.
Yeah, brilliant stuff, mate. Okay, fantastic. Well, we will bid you goodbye for now, or bon bouche, as I like to say. And thank you to you, Jeff. Thank you to John. Thank you to Angel for looking after us, and thank you to everybody that's in the room as well. We will see you next Monday. Have a great weekend, guys. And if you're trading the pound, make your decisions. If I were you, and walk.
What he said. Bye-bye.